This week we continue a look at a key bellwether of how local employers are doing, asking rents and other conditions of the Honolulu commercial real estate markets. Mike Hamasu is director of the research division, and Mark Bratton is retail vice president of Colliers Monroe Friedlander here in Honolulu. First of all, Mark, how in general does the market look to you? I noticed that we've seen rising occupancy, rather rising vacancy rates, but they're still below the mainland.
Yeah, I think we believe that this market has weathered better than we thought for 2008. We're starting to see some vacant storefronts as we drive, the local streets, and we're hearing of chaos on the mainland, but it really hasn't arrived here yet.
The weird thing about commercial real estate is that we can tell this from the landlord's point of view, in which case everything's still pretty swell. But then if tenants were kind of hoping to see a lot of vacant storefronts so they could get a good deal for a change, they probably wish there were more of a slump, I guess.
Yeah, that's true, and there's always two sides to the story. That some of the tenants that we represent, the ones that are based in the mainland and the bigger chains with more financial clout, are demanding more concessions, lower rents than we were talking about a year or two ago.
Okay, we'll get into this a little bit more, but first let's get some of the latest numbers because, Mike, you just put out an update on industrial vacancy as opposed to office space or retail space.
That's correct. Usually at the end of the year I'm pretty busy, so I get all these reports done. But for the industrial market in particular, we have had a softening. Vacancy rates are rising. We're up to about 4.4% at this point in time. Comparatively speaking, we're still very healthy. I mean, most of the increase in vacancy was due to industrial condo developments that hit the market over the past year. So as a result, most of that stuff, when it's built, is vacant. So that's why we had an increase in vacancy.
Now, I didn't know that term. What did you mean by industrial condo? I remember reading that in your report.
Well, industrial condos are very similar to residential condos, whereas
so the tenant actually buys it?
Right. Usually there's a very large building that's built and they segment it into bays or sections, and a prospective buyer comes in and purchases just the unit of that building.
Okay.
And that's why it's condoed.
And you cited three of them, two of them at Kapolei and one at Waipio.
That's correct.
Okay. By the way, are there any of those in the pipeline, or was that it?
At this point in time, we're not aware of any other ones that are, I mean, there are probably some being planned, but they're not anywhere near coming up in terms of delivery or construction at this time.
Okay. Now, Mark, you were talking earlier before we went on about how there are some real investment opportunities because the market is like this.
There are, and I think coming into 2009 and 2010, they get greater. And, as Ted was talking about earlier, there are local investors and mainland investors that are sitting with a lot of cash. And now their T-bill rates have gone down. So the rates on commercial investment real estate are starting to look good. And their expectations are definitely to obtain higher rates than they did 2, 3, 4 years ago. We're made aware of some situations on the mainland this week that, people that'll be forced to sell where they may have bought properties Class A, AAA credit. They bought at 6% returns. They'll be selling them at 9 and 10% returns next year.
Is part of this that the sellers have decided they need to get out in order to raise cash that they can't raise in the credit market?
Yeah, the situations that we're talking about are mostly on the mainland, large REITs, people who really over-leverage themselves.
Okay, REIT is R-E-I-T, Real Estate Investment Trust, for civilians in the audience.
Yeah.
Of course, General Growth Properties is a perfect example of that. That's an REIT, and they're the second largest owner of malls and owner of Ala Moana Center in Victoria Ward and Prince Kuhio Plaza, and they would sell any one of those right now just to have the money.
I'm sure they'll hold on to Ala Moana as long as they possibly can. Some of the other ones are on the market. And they're really the only one that's in that situation in Hawaii. There are quite a number of them that have to deleverage and will have to sell properties in the mainland. So the effect that'll happen in our market is the investors who now have a choice to invest in our backyard or in Southern California or Florida or Chicago will be looking for higher returns.
Have you actually heard from somebody who said, think of me, I'm sort of looking for opportunities like, yeah?
Yes.
More than one?
Yes, more than one this week.
Wow, that's actually very interesting.
It is good to see at this point in time in the economy, the recession, that people are looking to invest. And I think what it is they're looking for the bottom. Everybody wants to know, when are we going to skid off the bottom, and then they're going to rush in. Mm-hmm. But most local, astute investors think we're still kind of here. And we don't believe you're going to see a lot of activity in the first 6 months of 2009. And that was actually just confirmed in a national study that we participated in with our company. About 200 major investors around the United States, and they all kind of said, we're going to sit on the sidelines for the first 6 months. When we see some job growth and some more available capital in the lending markets, then we'd jump back in.
Has anybody local approached you yet? I don't even know if there's that much money. I know we have a lot of people who invest who are based in Hawaii, but for something like this, we're talking about pretty big ticket items.
Yes, the two this week have been local. Yesterday, a nice doctor came in to see me on one of the properties I have for sale, and reminded me that, I've got a lot of cash sitting and I'm looking for great opportunities. Here's my criteria.
Interesting. Boy, this sure goes to one of the most fundamental things about the economy, any economy, that there's always an opportunity for somebody. Wow. Okay, now while we've got both of you here, Mike, I just want you to recap your other reports, how we stand on retail and office space right now. We have seen a little bit of an increase in vacancy, but it kind of sounded like you don't think either one of those situations is yet at the point where landlords are going to bend over backwards just to land a tenant.
Right. In the retail report we completed, actually it's the opposite. We've had significant amount of growth in the retail arena because of new developments that have recently been occupied. Things like Nordstrom over at Ala Moana Shopping Center, Safeway Kapahulu, and Pro Ridge Uptown 2 near Pro Ridge. All of those projects came to fruition in 2008, so as a result, leasing was very successful and growth occurred in the marketplace. Rents still have not come down in the retail arena, and vacancy rates still are about a 3.2% at this point. But as Ted Liu and a number of your economists have mentioned, 2009 is a big if factor. The anticipation is that vacancy rates will start to rise in 2009, softening in the market will occur, and ultimately rents will probably stabilize and start to sink a little in 2009. So from a retail tenant that's looking for space, you might want to consider holding off until middle or later part of next year.
Right.
From the office perspective, we just completed our stats as of yesterday. Vacancy rates have risen. It's the sixth consecutive quarter of rising vacancy rates. So it's a general indication that yes, the office market is softening. We're starting to creep upward towards about 9% at this point. Okay. For the first time in probably the last 4 years, rents have actually started to soften in the office sector.
Oh, okay. Yeah. Now, Mark, we were talking about opportunistic investment, and it occurs to me that there's another way of looking at that, another form of opportunity, and the guest who follows you will be from Target, which is hiring people right now, moving into Hawaii in a big way. And I guess that's another form of taking advantage of the current situation in a declining economy. A retail chain that hasn't got much of a presence in Hawaii but would like to may find it easier than at almost any other time to move in. Although after they open their doors, that might be another story.
Yeah, I appreciate you bringing that up, because to dovetail on what Mike said, the last 9 months we've seen the development pipeline shrink. So we've had a very healthy, low vacancy rate, but a lot of projects getting canceled. Mm-hmm. And the potential projects that have been canceled have been typically unanchored or not able to deliver an anchor tenant. So we'll see selective developments. There are a few that are going to get done, and the drivers of those developments will be those anchor tenants.
Okay. All right, well, we've got a lot to chew on here, including the very interesting point you made about how nobody's sure what will happen next year. Forecasts are fine, but it's important for people to remember that the question marks are in a larger type font than usual. Thank you so much, guys.
Thanks, Howard.
Mike Hamasu is director of the research division, and Mark Bratton is vice president for retail and investment of Colliers, Monroe, Friedlander. It's everybody's business.